Hey folks, welcome to a live session on NFP. We are streaming live now out on YouTube, Friday the 4th of February 2022. It's about 12 minutes past 1 here in Dublin. And we've had a good bit of downside, it has to be said, on equities. A little bit of a gap open from the sell off last night. So a gap up on the open to close that gap on NASDAQ, on SPOOs now. But with the Dow in particular, we've seen quite an interesting continued amount of selling off. We're only down 0.28% on the pre market now for these US equities. Quite a large bid up in the Bund this morning, really kicking off at about half nine. In the not in the Bund, in the VIX. Um, so yeah, it's going to be about 17 minutes now until we get the NFP figures. Of course, we've had this telegraphed from a couple of Fed members, namely Harker, actually earlier in the week, and I think it was late last week actually, had said that they're kind of expecting a pretty crappy jobs number today. Consensus on the street is 150,000. Prior 199,000. This is kind of pretty dismal stuff expected here. Now, the range on expectations goes from negative 220 up to positive 250. So it's quite a range. We really have to think that the market is pricing in, the interest rate expectation on the rise in at the end, in March, at the end of March, but also a bad jobs data figure today out of NFP. Now, I've been banging on about this. The guys in Discord are going to be totally sick of me saying this, but really, I'm looking at the average hourly earnings as being so important. Now, why is that important? We'll get over to the charts in a second, but the average hourly earnings is really important this time because we are in this higher inflationary environment, persistent inflation. It is not, I repeat, not transitory. And with prices going up, okay, well, that's fine as long as the wages get pulled up to meet it. But at the moment, we're not seeing that happen. Now, why is that important? Well, it's all very well for prices on goods and services to go up, but people need to be able to afford that. And how can they afford that? They look for a raise in their wages, essentially, and then you get this kind of self-economic fulfilling pattern where people are paid a higher wage to afford products at a higher price, and you get then positive GDP growth overall. Right. Sort of boring stuff, yeah, but really important. All right. So the other thing that we have to indicate that we're actually going to get a poor average hourly earnings reading today, year on year, is set to come out 5.2%, just above the prior 4.7, and the month on month set to come in 0.5, just below the prior 0.6. Now, the reason why we are kind of keeping a hairy eye on this is that yesterday we had, sorry, I'm just going to pull this up. We had the unit labor cost uh, readings out of the US come out quarter on quarter, 0.3% miss on the expectation, 1.5%. So that's, the unit labor costs is kind of, how much it's costing the manufacturing sector for labor, and that's dropping, right? So, it's not a good picture. It's not a good picture. The prior figure on that was 9.3, by the way, and we got a 0.3 yesterday. All right, so let's kind of just get over it. Tim, show us the charts. We don't need to know about all this stuff you're talking about. All right, well, what's important here, really? Number one, I got the VIX bottom left of the screen. I'm going to take my mug off here and we can then blow it up. So the VIX really has had a good excursion this morning, starting at about 9 a.m. Bang, up to resistance, 25.75s. But really, if we stay sort of what's called condition up here, we can pull back to the opening, electronic opening at 24 spot ones. But really, we've seen this thing over the last couple of weeks and, in fact, days print much higher prices. Now, I'm actually going to go out onto a daily here and we'll see. These are kind of historical high levels going back as far as 2016. Um, of course, back in 2016, the highs were actually in more like 16.48. But you can see now over the last number of weeks, 16.48 is the support. It's the bottom of the VIX for well, going back to June, actually going back to April last year, right? So higher volatility environments. All right, of course, the VIX is negatively correlated with U.S. equities. Higher VIX, lower equities. Higher VIX means people are buying more puts, and i.e. downside protection, right? So it's called the fear index. So it's a crash course here, right? But what I'm looking at is 29 spot 45s is somewhere where we could get to. On all these levels, 30s, 31s, 32.8s, these are all pretty significant levels. We don't want to see, as a precursor on a 15-minute or a 5-minute bar, we don't want to see this market holding above 25s or 26s because we are going to take out the 29s should that happen. So I'll keep you updated on that as we go through this trading session. All right, so we've got about 12 minutes now until the data. All right, so where are we looking at here? Let's just have a quick look across at the scoreboards. Yeah, there we go. Lost my mouse temporarily. It's a frequent thing. Sorry, there we go. NASDAQ. Just let me turn on my highlighter, which can be quite a useful tool. Boom, 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 boom. Okay, here we go. All right, so what we've seen over the last 2 weeks, a departure from the channel up on the NASDAQ. I've talked about this in the pre-US numerous times. We traded this breakdown live. We saw a little bit of an attempt so far in this week to get back on up, and I still do think that this market is set to reach back up for a retest on the breakdown point. You know, if this is a 5-minute chart, we have the strategy is if you don't get the breakdown and scalp this entry on the breakdown, you really need to wait for the pullback and then look for see if the shorts are valid still at that point, and then short it for lower, right? These are weekly bars. Okay, so you can see this market is trying to get back up here. So really the prudent levels to look out for are supports below around this S2 for a bounce back up. You know, and then if we start heading back up, well, just to keep you in the loop of what these yellow places are, these are the gaps on trade. Gap down here Wednesday going into Thursday's trade, and then a gap up here Thursday going into Friday's trade. All right, so a lot of this weight brought, all this weight really brought on by Facebook's downside, 26% down as of yesterday on the 2-day range. So you know, a lot of weight there in the Nasdaq. I don't know if these dip buyers are going to come in. I am going to have a little cheeky look at Facebook in the corner of my eye here. Let's see if on the pre-market people are actually buying this, and on the pre-market, well, this whole shaded area here is the pre-market, and that doesn't look too bouncy to me. That does not look too bouncy to me. From where we closed last night, up. Yeah, it pushed back up 3.96, and it's currently only bouncing 0.38%. All right, so it looks to me like we're going to actually breach yesterday's lows on the open here. Okay, so it's a red ladder day for Mark Zuckerberg. And but hey, listen, it's all in the metaverse now, right? So we don't need to worry about it too much. It's not real. Well, it's not real to me, thank God. All right, SPOOs again. Look, it's all very heavy. We closed the gap, right? We closed this gap. I'm going to keep these gaps on in yellow. We closed the gap, and we got more downside to price in here. And the Dow, it's no gaps on the Dow, but really for me, we've got 9 minutes for me now, and I will be handing over to the guys in New Squawk for the reading. But the Dow, yeah, the Dow, right? So Dow center right of your screen, and you can see this little area up here. I was actually interested in the shorts at this point. Then I thought, okay, resistance turned support. I was buying here, no such luck. And then, sure, she broke down yesterday late in trade, and I really wasn't interested, and was trading a lot more Nat Gas, and quite happy with myself on Nat Gas. So be mindful of this uptrend on the weekly bar. If we breach this trend, you can see it in green down here, just here, right, just below S2. Uh, if we breach this, you are going to probably get a pullback test. This line in the sand in grey is going to be a nice little key to let you in the door there for the shorts. But I don't really know if I want to go chasing this market down, especially over NFP. And the trades for me are going to be coming probably a good, well, a good half an hour after the actual US Open, which will be at half 2 GMT. All right, oil, not much to say. We've done a pre-US session on this already. We are trading well above this tight range we had. Really, the best area down here was 86.80s. You can see that well telegraphed yesterday. The trading team in DC Capital have seen my fills on this. And this 86.80s has been the level for me to risk off of for the longs for the past, well, going back really to 27th of Jan here, right? So kind of nice, easy trading. I think we need a pullback. I really do. I think we need a pullback in oil. But you're going to get a lot of upside on energy equities today, to be honest, in my view. All right, we got 7 minutes now to the figure. I would keep an eye on the Dixie. If you're going to trade equities, you gotta be, or sorry, FX, you gotta be looking at this Dixie. I think bad figure. I actually think we're going to end up by the market open dollar down. I think a bad figure is really priced in and advertised here. So, I think equities probably still going to see some downside, but it just depends on how bad the figure is. I think negative number, yeah, we're going to go down. But the average hourly earnings, if you get a really low figure there, I think that's going to be the biggest downside catalyst for equities. That's just my hypothesis. All right, 6 minutes. Passing over to the new Squawk team. Sorry, I didn't realize I had the New Squawk team already streaming live, so you probably had both of us talking at the same time. My apologies. I'll shut up now. All right, thanks, Kawai. 5. Cheers. Let me fix that. Right, running test audio here. That looks good to me. Seems like everyone can hear that on the stream. Just from the shape of the VIX right now, it looks like it may drop down for a little retest on the opening price, in which case you are going to get a little spring pop on the likes of Nasdaq back to the gap high. But SPOOs, I just don't see that happening right now. I mean, yeah, over major volatility, you might get a spike up, but that'd be too far too fast, really, for me on a market like that. There is no squawk here, boys. There's no squawk talking right now. Let me just check. You guys are getting the stream. Yeah, you are getting the stream. All right. Hold on a sec. Just let me.
The employment change forecast at minus 117.5. Says that the Lithuanian Prime Minister says Baltic energy companies are working closely together to prepare for the possibility of Russian gas supply interruptions. 10 seconds. .467, that's 467, both expected of 150 for the headline. The unemployment rate, that's at 4%, both expected at 3.9. The headline, that's been revised to 510. The earnings components month over month, that's 0.7%, both expected 0.5. Year over year, also firm at 5.7%, both expected of 5.2%. Then for the work week hours, that's 34.5, but expected 34.7. Labour force participation, that rises to 62.2% from 61.9%. And for the Canadian jobs numbers, that's minus 200.1,000, below expected at minus 117.5,000. Full-time minus 82.7, part-time minus 117.4. Unemployment rate, that's 6.5%, both expected of 6.2%. Labour force participation rate, that falls to 65%.
All right, I'm going to
Just go back to the US release, so from private, that's 444, but expected 150. Manufacturing 13, but expected 25. Government, that's 23, gets approved revised of 7. And in terms of earnings components, do bear in mind DC revisions. So the month on month, that was revised low to 0.5 from 0.6. Year on year, though, was revised higher to 5% from 4.7.
Okay, so all right, we have good earnings here. All right, we have it coming out. Average hourly earnings year on year. January beat 5.7 above 5.2 prior 5, so it's a good number. Average hourly earnings month on month coming out good. 0.7% above 0.5. So this is a good direction for these wages to go, and this is positive for equities. But you see, technically, these equities are not really in a decent space here right now. I'm not touching any of this right now. See the volatility obviously taking a bit of a push, but the bonds now, look at the Tino, it's getting crushed here. It's going for another little leg. I mean, yeah, another leg down. Let's all right, let's go back on the daily here so we can understand this Tino smooth treasuries bonds. Tinos, there we go, on the weekly bar. So look, my maniacal plan is coming to fruition here to test on the trend. We need to come down lower. All right, now if you're going to come down lower, you got to be aware of this. This is going to be mega weight on the Nasdaq. There's no way the T-nose is going to print down at that area, and Nasdaq is gonna hold where it is now. No way, no how. Why? Because bonds lower, yield higher. People go from Nasdaq to the bonds for the yield. All right. So try and stay out of trouble, but really, but that's the catalyst for staying out of, or really the catalyst of more downside on the Nasdaq is more downside on the bonds. All right. So positive correlation there. Okay. Now, weight is still apparent here, and on the equities, Dow, there's no hope here. No hope at the moment for the longs. Seeing gold now pull back 1803 spot eights. Nice little area for the brave here to get involved. Cable pulling back to 35.14s on a little bit of this dollar strength. And you're seeing the euro getting pulled back down out of its mega run to the upside over the last 2 days now. So there you go. Nasdaq, new lows on the session. VIX coming up. VIX bouncing off a VWAP, coming up to 25.75's next target above. It's got a country mile to run if it puts in some good trade above the 25 spots or 76s, right? So you got to really be mindful of what this VIX is doing here, boys and girls. I'm not interested in the shorts really. It's a little too extended for me on equities. Quite happy to not do anything here. Let's check in on Facebook pre-market. It's breached yesterday's lows. It's breached yesterday's lows on the pre-market. So let's just zoom in and see what's happening here. We're on in 1 minute. Can I get pre-market on the? Yeah, there we go. So pre-market on the 5 minute. Just get that low of yesterday here. All right, so low of yesterday, 235 spot 78. We've got 235 spot 51s now low in the pre-market. It's not a good sign of a bounce to buy there, is it? Now the VIX printing 25. It's all right. We're on that resistance point here, 25 spot 76s on the VIX. And now you're seeing that pressure correlation effect happening right here. Let me go full screen VIX. Now you're seeing that pressure, right? Upside. New lows across the board on equities. Gold pressing down now, 1800s to trade. She's your brave man, Reed. Brave man. What's not gas doing this morning? A little bit of downside, down 0.8%. Euro new low on the session. All right, now while you see the VIX is standing back a wee bit here, right? Do you want to be long equities here? Well, speaking from my point of view, I would not want to be long equities here because I don't see that the VIX is going to stop here at all. But more to the point is I don't see equities finding support anywhere where they are right now. Okay, you got 200 EMA on SPOOs down below here, about 43.38's S3. And Dow, I got a test on the trend where S2 is the next support down. Nice clean selling off of 34.907s. And I think a little bit of this Nasdaq weight is also going to kind of put the brakes on WTI now as well. So cable, interesting area of support really. Yeah, what a bounce. 36.13's high of day or thereabouts, and now back down to this significant level. Gold, new lows, just above 18s, psychological level, big one. The headline figure, just to recap here, headline figure came in 467. So that's way better than the consensus of 150,000. Obviously, prior 510. So Harker really kind of fooled us all into thinking things were going to be a bit worse than we thought they were. I mean, so in that sense, this is positive for the market, but you tell me where they're all buying it. You know, we are a lot lower than where we were pre-data.
On that US report, which was characterized by a large beat on the headline month-on payrolls, a large revision to the prior, strong earnings components, and a jump to the labour force participation rate. We have seen treasuries hold on to the downside. Just above 127, where there is said to be a large put interest. From a yield perspective, we're currently at 188.68. We did briefly pierce the high print seen on the 19th of January at 190.20 to make a new high of 190.30. Equities, again, the price action slightly more contained, but there were some downticks seen in the wake of the release. Whilst in the FX space, to see the dollar print a high print position at 95.65. Have pulled back closer to the 95.50 mark now. Dollar yen, that's firmly above at 115. And to see the greenback way on both the euro and sterling. CADs, that was a double hammer blow, given the unexpected US jobs reports and expectations Canadian reports. Here the dollar CADs currently at 127.60. Let's note the 30-year tips has now gone positive for the first time since May 2021.
So to be honest, this is quite a benign market reaction, I have to say. All right, look at gold there, down through the 18s. Down through the 18s. Yeah, here's gold. It's. I think I'm finding myself about to say I think it's too cheap here. I mean, if you're limit order long on 18s with a 20 tick stop, you are out right now. But you could catch something here. Reed, what do you reckon, man? I know you were going in for a seriously fast short on the eyes on the yen. Nice one. Lucas says, wouldn't this good data just support a rate hike then, as it's showing a good economy? Yeah. I don't know. I don't think the market needs a justification for a rate hike. Maybe to soften the impact of a rate hike, but I don't know. I don't know. I mean, we can have a million and one hypos about this, but gotta turn on some lights here. Hold on a second. Yeah, I don't know. I just think Facebook, for example, tech is really getting hammered. Okay, it's starting to put up a bit of a fight here in the pre-market. Got 19 minutes until the pit open on oil. And yeah, so we're going to close this about 1:45 GMT, so that's in about 3 minutes time. Seeing downside kind of held quite well on equities here. The bund or the T notes dropping and holding here, so you could hear the squawk. Guys at New Squawk, telling us that the yield was peaked at there at 1.9%, right? So that's a pretty decent yield. That's a pretty decent yield. Is that it on gold or dollar? It's looking like it. It's looking like it. Cable now putting up a fight, 35.14s. Gold finding it really hard to hold below 18s, but it's also going to be really hard to hold that long right now. Yeah, Reed certainly feeling the effects. Yeah, it's come down so much here. I'm kind of interested in the long side, and if it gets back to 18s and shows me a little bit of aggressive buying there, I'm gonna wait, see what the sellers do against the aggressive buying, and then and if they haven't got anything, I'm just gonna get long. There is certainly there are certainly traders. I'm looking at the tape here, stepping above market to buy this here. Sort of small size. Yeah, sort of small size. The bid, yeah, I mean the bid's around where it is now, reasonably strong. The offers are kind of weak. You're seeing a bit of pulling off the book here as well, and the offers just above around 18s, like just a little bit, but not overly enthusiastic about taking a trade on that because as you can see, it does not look great. Shout out on YouTube. How's everyone doing? Whopping viewership right now. Shout out to Anthony. Hope you're doing well. If you're watching.
Just going to welcome people to the session, get everyone back online, and I'll catch you guys next time.
All right, so that is it for me for this FOMC session, or sorry, FOMC NFP session. I'm a little bit frazzled. Today, I have to say. But yeah, thanks for tuning in. Yeah, it's been a good session. Pretty quiet, I have to say, for this NFP. So really, the fireworks are set to come now. Just in about 45 minutes when we get the open. So, all right, have a good session, and I'll talk to you later. Cheers.